Most founders think investors invest in pitch decks. No, they don't. They invest in a very strong and clearly articulated investment narrative. And in this video, I am going to be showing you how to build a very clear and strong investment narrative. Let's get into it. For many founders, they have a business, they have traction, they probably put some documents together. But when they get into the investor conversations and pitches, that's where it all comes crumbling down. Because when the investor asks the question, why are you raising capital? Their answers fall flat. It is vague, it doesn't have substance, and it is not inspiring to the investor. Let's fix that right now. To fix the narrative, you must understand that an investor is evaluating an opportunity here. And the question that should bring to your mind is, what exactly are the parameters by which they are evaluating this opportunity? Well, there are two core parameters. Number one is the growth story of the business, and number two is the round story. The growth story is that which focuses on the opportunity, the business. What is the business? What is it looking to accomplish? What are they looking to use money for? And then on the flip side, you have the round story, which details the bits and bobs around the funding round itself. So let's talk about the things that you must have in your growth story. Number one, a very clear and compelling vision. Your growth story begins by you stating a vision that more than one person cares about. You cannot be the only person that cares about your vision. For example, your vision cannot be to be the biggest in your sector, to be the biggest in your industry. You have to find something that is compelling, that pulls at the heartstrings, or that a lot of people really care about. For example, if you said that your vision was to eradicate waste in the medical sciences industry, a lot more people care about that as well. So it has to be something that people care about. That's the first part of your growth story. It's not enough for the investor to just understand your vision. They also have to understand what your growth objective is. Let me tell you the difference. The vision focuses on the long-term North Star vision. The objective is a short to medium-term growth objective that is quite intense and specific that you're looking to raise capital for. So for example, your growth objective could be to grow from your current level of £10,000 a month in monthly recurring revenue to £100,000 a month in monthly recurring revenue by October 2029, as an example. It's specific, it's tangible, it is built around two parameters: a growth objective and a timeline. So when you are done talking about your vision, you want to articulate very clearly the core growth objective that you're targeting as a business, as well as the timeline that you have for that growth objective. That helps the investor understand specifically where you are at along the journey of achieving that objective. So number one is vision, number two is growth objective. Number three is the strategy. What is the strategy for achieving that growth objective? For example, if your objective is to grow your business to 3 million annual recurring revenue by 2030, what exactly are the steps and the strategies that will get you there? Are you going to be, entering into new markets? Are you going to be growing your share of pocket of your current clientele? Are you going to be acquiring new customers? What specifically is the strategy? What are the channels that you're going to be utilizing to get to that growth number that you're looking for? Is this a software play? Is this a hiring play? Is this a new product development play? What exactly is it that you plan to do? The specific sequence of actions that is going to get you to the objective that you raised in number two. So number one is the vision, the North Star. Number two is the objective, what we want to accomplish. And number three are the specific strategies that will get you to your growth objective. One in though, particularly around number three. You want to build your strategies around no more than 3 pillars, because anything beyond that just makes your story too elaborate to fit into a pitch. So for example, you want to say something like, to achieve our 3 million ARR objective by 2030, we're going to be building and deploying 2 new products that are in our pipeline into the UK and the US market. Something like that. Very simple, very succinct. It doesn't have to be deep or elaborate. Remember, this is a pitch context. Fundamentally, you're talking your vision, your objective, and your strategy. Those three things make up your growth story. Now, let's move over to your round story. Your round story contains a range of elements that empowers the investor to make an informed decision whether or not this deal is for them. The very first element of your round story is your funding ask. Your funding ask is essentially details how much money you are asking for. It's very simple. Is it £200,000? Is it 2 million? Whatever the number is, that's the first thing you have to be absolutely clear about. The key thing to note here is this: your ask must be very specific. It cannot be a range. What should be a range is number two, your valuation. The reason why valuation can be a range is because when it comes to valuation, it's always going to be a negotiation between you and the investors. Valuation is not an exact science. It is based on a range of different factors. And so for you as a founder, the valuation you come into the market with is not necessarily what you're going to raise at, because the investor, the other counterpart in the deal, will also come to the table with their own valuation as well. This is why I always suggest to founders to have a valuation range. This gives you a floor and a ceiling. The floor is the low valuation number that anything below that you're not doing the deal, you're walking away. And the ceiling is what makes sense. Obviously, we know that in a funding round, you want to raise at a valuation, as best a valuation as you possibly can. As a result of that, there really is no ceiling, but you want to put a ceiling of something that is reasonable. So for example, I would say in a funding round situation, we're looking to raise £300,000 at a 2 million valuation. But in my mind, the range I'm playing with is anywhere between 1.5 and 2.5. But I just go smack in the middle, because obviously you don't want to say to an investor, we're raising 3 million at any valuation between 2 million and 5 million. They're definitely going to go for the lower one. So you just keep it simple, give them one valuation, but you as the founder in your mind must come prepared with a valuation range, because that just helps you to know when you walk away, and it helps you to know when you've gotten a great deal. The third thing in your round story is the stage. What stage of funding are you at? Are you at a pre-seed stage, a seed stage, a Series A stage, Series B, and so on and so forth? Fundamentally, the thing to understand here is that the stage of your funding will match the stage of your business. So for example, if this is an idea that is about to be launched into the market, so you have an idea, you've built an MVP, but you're just about to enter into the market, that is most probably going to be a pre-seed round. If you're already in market, you've already started generating some revenue, you have some traction, and you're looking to raise your first structured round of funding, then that's probably your seed round. And it just progresses that way. There are many stages in the fundraising round. You just want to figure out specifically where you are at, and the way you figure that out is literally matching it with the stage of growth that your business is at. Number one is your ask. Number two is your valuation. Number three is the stage. Number four is the type of funding that you're raising. You're either going to be raising equity or debt. In terms of structure, we're thinking, is it a SAFE, which is simple agreement for future equity, or ASA, Advanced Subscription Agreement? They're literally the same thing, they just call different things in different countries. So that's one structure. Or your round could be a mixed round of debt and equity, or it could be a convertible loan or a convertible debt, or it could even be crowdfunding. There are many different structures of funding. You just have to be sure about what structure you're going with. The next thing in your round story is your round close date. Now, this is one that a lot of entrepreneurs skimp on. You want to go into an investor conversation with a deadline in mind, because if you leave it open-ended, there is no urgency. The whole idea of having a close date as part of your round story is to create a bit of urgency in the minds of the investor. And by the way, you shouldn't just do this by just picking a date that is close by. You want to have a strong rationale for why that close date is the close date. For example, it could be a macro level event that you're pinning your strategy on, and that event is at a certain date, month of the year, and you want to ensure that you're ready to take advantage of that. So essentially, having a close date and having a rationale for that close date, it helps set a bit of urgency around your deal and helps investors take you more seriously. The last two bits of your funding round is what type of investor you're looking for and what you're looking for in an investor. They're two sides of the same coin. What type of investor? So are you looking for an angel investor, a venture capital investor? Are you looking for a private equity investor? And then secondly, what are you looking for in an investor? Is it just money you're looking for, or are you looking for an investor that will provide industry connections? Are you looking for an investor that has industry knowledge? Are you looking for an investor that could provide back office support? Whatever it is that you're looking for in an investor, you should incorporate into your round story, because investors want to know that founders are not just thinking about them from a money standpoint, but also from an implementation standpoint. It's just one of those extra things that lets me know that you are actively thinking about the implementation, not just the money. Now that we have all the pieces, let's put it together. So we're going to be using an example to bring together the bit around the growth story and the bit around the round story. Let's assume I am a medical technology company building robots for surgeries. I could say the vision is to reduce human error in medical surgeries across the world. The objective here would be to get 100 robots into hospitals across Europe over the next 3 years. And the strategy here would be a Europe-wide partnership with university hospitals. That's it for the growth story. On the round story side, the ask is £500,000. The valuation is £3 million. The stage is pre-seed. Close date is December 2026. Type is equity. Who are we looking to raise from? VCs in the medtech space. If this is the scenario we're playing with, this is what a strong investment narrative would sound like. So you are an investor and you meet me at a pitch event, and I tell you, oh, my name is Davis and I run a medtech company and we're actively looking to raise capital. And your question is, interested. Tell me about your funding round. I say to you, so as a business, what we're looking to do is to reduce human error in surgeries globally. And over the next 3 years, our primary objective is to get 100 of our robots into hospitals across the whole of Europe using a teaching university partnership strategy. We are currently raising a pre-seed equity round of £500,000 at a £3 million valuation, which we're looking to close by December 2026. We're looking specifically for VCs in the medtech industries that could open doors to strategic relationships that would help us achieve our vision. There you have it. A strong narrative is essential for you to unlock an investor's attention, which in turn will unlock the funding that you're looking for. If you'd like to learn more about some of the concepts that we've talked about in this video, check out the other video right here on the screen. I'm sure that you're going to find it useful as well.